Hey, Roy.
How's it going?
Good. How are you?
Doing good.
Well, hi, Tyler. Hey, Lynn. Hello. How's Maria today? Hey, y'all. How are you? Aaliyah, what are you doing? Trying to get your last little bit of summer in?
Yeah, I mean, if I could just go to my summer house, that'd be great too, but I'm at school.
You know, it's supposed to be nasty this weekend. Like starting on Friday, it's just supposed to be just downright miserable. Hey, Mary. Hey, Jake.
Hello, how are you?
I'm good. How are y'all?
I'm not going to be able to talk much since I have strep, but I'm here.
Better strep than anything else, right?
Yes, exactly.
Since you brought that up at 329, I'll tell you this, folks. I've got 4 people in my immediate circle who have COVID.
Oh, no.
Okay. Those are 4 people that I consider to be really good friends. I haven't spent time with them. One of the couples, we've been over to their house about 3 times, but we carry stuff and we leave it on the front doorstep and we ring the doorbell and run. It's kind of like, what is it? Ding dong ditch? Is that what the old game is called? Yeah, we carried them food and stuff, but we hit the doorbell and run. Actually, we just go to the end of the walkway and we shout, "How are y'all doing? You okay?" Very oddly, the husband in that couple has never had a symptom. The wife has had it bad. She's had it miserable.
Oh, wow.
Another lady in our life group at church who's got COVID pneumonia. She was in the hospital for 3 nights, but she's gone home.
Wow.
And there's another good friend of mine who's on my hunting lease and also a professor here at MSU who is COVID positive.
Oh, wow.
Fortunately, I've not been exposed to any of them. So only reason I tell you that is we continue to be record breaking in Wichita Falls. We had 111 cases yesterday, y'all. That's the most we've ever had. There was an article on the front page of the Times Record News today. We have had more cases in the last 2 weeks in Wichita Falls than we had in the entire previous 5 months.
Wow.
So be safe out there, okay? Be safe out there. It's not good, okay? If I approach your desk, you tell me to get away. Particularly at the end of a day like this, because quite frankly, at the end of a day like this, the way these numbers are, I can't wait to get home and take a shower. And it ain't nothing about y'all. It's just I want to get anything that I've picked up during the day off of me, okay? So I'm going to try my best to stay behind the lectern today. But what my goal is for you guys is before we leave today, I want to make darn sure that you understand the cash flow. So I've looked at everybody's statements that you uploaded to the work in process Dropbox. I've created another work in process Dropbox with the correct date this time, the 25th. So you have until the 25th at midnight. That's Sunday night at midnight to upload your statements. I did verify for those of you who didn't get an email, I did verify that the email went out. It was sent to your D2L email. Hey, Kira. It was sent to your D2L email. If you didn't get it, that's the one you need to check. There's an option very, very simply in D2L when you're looking at an assignment, there's an option that says email everybody who's not made a submission. And when it does that, it only picks up your D2L email address. It doesn't pick up the other email address that's in the system. So it only goes to D2L. And folks, I know I've seen so many of your computers that might have 100, 200, 300 notifications in D2L. That's the way that we communicate with you officially, right? So, I mean, there's an email that's in Banner that may or may not be good. Then there's that D2L email, and particularly in these COVID times, make sure you check that D2L email, okay? So having said that, I noticed a couple of problems on the sources and uses of funds that I just want to tell you how to fix, okay? There's Jose. Got your notification. You feel okay? Just exposed, feel okay? Okay, good. I got you down. All right. So a couple of issues that I saw is on the sources and uses of funds. You guys are just typing numbers in the cell. Now, that's acceptable. And if you print your statements and turn them into somebody, they're never going to know that you just typed your numbers in the cell. But the problem is that you're not harnessing the power of the software. It's a spreadsheet software, and what that means is it has tremendous calculating power. I mean, Excel today will do stuff that SPSS couldn't do 5 years ago. And I mean, it's just really, really powerful. And you can create all kinds of functions. So I just caution you to go in and do everything exactly as I tell you to do. Okay, there's a method for my madness. What I'm trying to do is to solve problems for you from down the road. I don't want you to have problems in the future, okay? So we're going to create a whole set of tabs in Excel. The next tab we're going to create is going to be the cash flow. Then we're going to have a tab for the income statement. Then we're going to have a tab for the balance sheets. And then we're going to have a tab for the break-even analysis. Here's what we want. We want, if you make a change on one tab in one place, we want that change to populate throughout the spreadsheet. That's the magic of Excel. If you're simply typing numbers into a cell, you're not harnessing the power of Excel. But not only that, since those tabs in Excel, you know, the actual spreadsheets, the pages aren't connected, every time you make a change on one sheet, you're literally going to have to go in and make that change on every other place that that number appears. And that's going to drive you crazy, okay? So here's the error that I saw so many of you make, okay? Take this sources and uses of funds, which is very simple, okay? You see this $500,000 here? I didn't type $500,000 in that cell, okay? That's not what I did. I went into this particular cell and I put in a formula that said, take what's in cell C2 and add what's in cell C3 to it. In other words, you can do this any number of ways when you're in Excel. One of the ways that you can do it is here, you could create an auto sum and just tell it that you want those two cells, right? That's one way to do it. Because it's only two numbers, I just said take C2 and add C3, okay? Down here for your total uses of funds, you remember what I said about the easiest way to lose points on your sources and uses of funds? If your uses don't equal your sources, you've got a problem, okay? So what's the easiest way to make your uses of funds equal your sources of funds? I don't know any easier way than what I did right here. I said, take cell D4 and put it right here. You see? That formula says, go up there and get cell D4 and bring it down here, okay? And then because we want to calculate the working capital in case we find out that one of our cost estimates is wrong and we have to raise the cost of our property insurance, or we have to raise our expenditure for furniture, fixtures, and equipment, okay? We want those calculations to update automatically. Okay, so we put a formula right here for working capital that says go to cell D12 and subtract C7, C8, C9, and C10. Okay, you see this formula right here says go to D4. This formula right here says take this cell and subtract these three boogers from it. Now there's actually a sum that you can put in there. That's kind of an advanced cell topic or advanced Excel topic. I saw some of you had done that. Okay. Ryan, was it you that had done that? I think somebody had put in minus sum of something. I'm not going to be picky about that, but what I will be picky about is there a formula in the cells that they're supposed to be a formula in? And are those numbers consistent across the financial statements? Because the problem is, if you're inconsistent in your numbers, your banker doesn't know what the heck you're talking about, okay? He doesn't know which number is correct. So you lose a tremendous amount of credibility when you say something. Have you ever known anybody whose story changed every time you talk to them? How long did it take you to learn that you shouldn't listen to anything that they say? Right? They don't have any credibility because they might tell you that it's 86 degrees and sunny outside, and they might tell you that it's 56 degrees and windy, right? Which do you believe? They have no credibility. The first time you walk out and you freak, you might be pleasantly surprised if they tell you it's 56 and you walk outside and it's 86, unless you're wearing a heavy jacket, right? And if they tell you it's 86 and you walk out and it's 56 and you're dressed in your summer wear, you're going to be real mad, right? Okay. So you got to make sure that you're consistent. And it's not just consistency on each of the individual worksheets, it's actually consistent within the worksheets, okay? All right, so just make that change, y'all. That's, some of you, I just said, hey, that's a problem, fix it, okay? So we're gonna put in another tab today. This is gonna be sheet 1. When you put it in, when you hit the plus, it's telling you it's put in a new worksheet, okay? We're going to rename that worksheet cash flow, okay? Do you recall that formula that I said you've probably been confused about cash flow, or you thought it was really, really difficult? And actually, I saw this on your statements. I don't know what happened, but you put kind of the cash flow instead of the sources and uses of funds, but you did operating, investing, and financing cash flows, right? What you turned in. So see, I don't want that. We're not going to break it down by operating, financing, and investing cash flows. So I'm going to give you the very simple formula that simply says, take your beginning cash, add your cash in, subtract your cash out, and that gives you your ending cash. It's no different than a checkbook, right? You look at your bank statement. What was your beginning balance? How much did you deposit? How much did you withdraw? That's your ending bank balance, right? So this is a very easy thing to do, but the thing that'll trip you up on the cash flow is just the mechanics of it, because it's not as easy as saying, okay, I'm going to take my beginning cash plus cash inflows minus cash outflows equals ending cash, right? There's actually different types of cash in and cash out. We got to make sure that we have all of those, okay? So in the first row, we want to have a header for every column, right? So for your cash flow statement, that's going to be broken down on a monthly basis, okay? We're also going to add a column in there that says what happens before you started the business. There's no reason to set up a separate cash flow for the period before you start the business. We just make one column, okay? And if we're looking at what happened before we started the business, we'll simply name that pre-startup, okay? Very simple. Everybody knows what pre-startup means. It's before startup. What did we do before we started the business, okay? Then starting there, if our business starts in January, our next column is going to be January. If our business starts in July, you could label them month 1, month 2, month 3, month 4, month 12, right? Let me show you a little trick. Excel is pretty smart. It realizes, okay, January, that's a word, and that's a month of the year. Anytime you are clicked on a cell, there's a really small square. There's a really small square, and you can't even see it. Down at the bottom, do you see that this corner is not like the other corners? You see what I'm saying? Okay. So if you click on that, it's a handle, y'all. That's what it is it's a handle. If you'll hover over that handle and then click and hold your mouse button and drag it to the right, guess what happens? It fills those in for you. Okay? Excel is smart enough to know, hey, that's January. What comes after January? February, March, April, May, right? All the way through December. Okay, so there's your 12 monthly columns. The last column that you're going to have is going to be a total column. Okay, so you have a total of 14 columns. The first column is what happens prior to starting the business. The last column is tell me what happened for the entire year. Okay, when I say total, it's total cash flow. So the question is, what happened to my cash flow for the entire year? Trust me, that's going to trip up some of you guys, because on all of the other columns, we're actually going to go in there and we're going to total things across. But for our total cash flow for the year, the number that should be in our total column for beginning cash is not going to be the total of all the cells to the left of it. It's going to be our beginning cash for the year. Okay? You with me? In other words, what do we do in that particular cell? We put in an equal sign and we say, go way over here to our pre-startup number, and whatever's in that pre-startup column, I want to put it over here in the total column. And oh yeah, y'all hopefully remember this from our balance sheet exercise. Prior to starting a business, what are all balances? 0. Okay. So what's our beginning cash for the business? It's nothing, right? Prior to starting the business, we have 0 cash. Okay. Everybody together? Okay, folks on Zoom, let me just tell you something, okay? I think we got 5 people logged into Zoom today. And when we do that, y'all probably don't see what I see. The problem that I have is you're taking up a lot of real estate on my screen, and I'm using a lot of commands in Excel. So I'm minimizing y'all, okay? I'm making you a thumbnail so that I will have my formula bar up here, my menu. So if you have questions, folks on Zoom, unmute yourself and ask those questions, and feel free to do that. Anybody that has questions, just tell me you got questions. You're on Zoom, unmute yourself, tell me you got a question. I can't see you, okay? Because I'm making you hidden, just so I don't lose any of my commands. I'm trying to give you as much real estate on the screen as possible so you can see what I'm actually doing, okay? So this is your basic formula for cash flow. Beginning cash plus cash in minus cash out equals ending cash, okay? We really don't need another row between that, so I'm just going to get rid of that. When we talk about cash inflows, there's going to be a couple of places that your cash can come from. If you'll go back to your sources and uses of funds, there's two of them right there. Prior to starting the business, what's happening? I'm borrowing $375,000 and I'm investing $125,000, okay? So that's two sources of funds, right? And that's two places money is coming into the business. So on my cash flow, I'm lazy, y'all. If I simply go right here and I hit equal and say go there, you see it puts bank loan in there for me. And then I can copy that down and get owner's investment as well. Okay? All I did was I went in. Yeah. I went into cell B5. When I put an equal sign, what I'm really telling Excel is get ready. I'm fixing to tell you to go somewhere and get something. Okay? And you can tell it, I want you to go get a number. You can tell it, I want you to go get a word. I can tell it to go get a group of numbers or a group of words, right? All I'm telling it here is go to my sources and uses of funds tab, my sheet, look in cell A2, and whatever's in cell A2 on my sources and uses of funds, put it right here. Okay? And you see the little handle right here? If I click that and drag it down, guess what it does? It says, oh yeah, you said go get sources and uses of funds, cell A2. Since we're copying that down, I bet he wants me to go get sources and uses of funds, cell A3. Okay. Now, honestly, folks, this thing right here is one of the worst things that ever happened to productivity when it comes to spreadsheets and word processing. Because before we had these, we had keystrokes. We had commands. If you wanted to run a spreadsheet, you didn't have the option of clicking in with a mouse. You used your keyboard. You couldn't click and drag. You couldn't right click, right? You had to use keystrokes. Me and Jesus are old. So the way that we learned is keystrokes. There's a ton of keyboard shortcuts. I'm going to show you some of them, just tell you some of them. And the ones I'll tell you usually work in any software program. You should always try it. If you see this thing right here pop up, know that my normal keystroke doesn't work. What I'm really trying to do when I do that is I'm trying to make it bigger for you, and Excel doesn't allow that, right? Excel says, if you want to make it bigger, here's your zoom, right? But if I'm on a web page and I come in here and I do new share here, okay? Let's say I'm here and I do Control plus, you see what's happening? My web page is getting bigger. And it'll happen to you too one day. When stuff that's on a web page gets to be too small and you're looking for that keyboard shortcut. So Control plus is one of those, okay? Make sense? All right, so let's go back here. So if you see that little monster pop up, just know that the dummy is trying to make it bigger so that you can see it. And that doesn't work here, okay? Another keyboard shortcut is when you want to copy something, Control C. Anytime that you have to take your hands off your keyboard, you're slowing down. Honestly. Anytime that you take your hands off your keyboard. I mean, my keyboard is here, my mouse is up here, okay? So if I want to copy what's in cell B5 down, I do Control C, and you see it starts with a little dashed line around it that's blinking at me. If I come down, I can do a couple of things. I can press Enter. I can press Control V, which is paste, or I can right click on that cell and select paste, or I can paste special, okay? Or another way to do it is just to click the handle and drag it down. Okay, so there's lots of ways to get there, but trust me, folks, we've had lots and lots and lots of guest speakers come in here. The most recent guest speaker who made a big impact on our students was a guy who came here. He had sold his oil company in the Permian Basin for $338 million. He was like 33 years old. And students asked him, what's the one skill that you didn't learn in college that you wish you had learned? And he said, Excel. For you in the business field, it's the most valuable software package that you can ever use, okay? So that's why I'm trying to get you proficient in Excel, all right? Where else can money come from? So we've got cash flows from financing, okay? Those two are financing cash flows. That's it. Cash flows from investing. We're not selling any fixed assets in the first year of the business, so we wouldn't have cash flows from investing. What about cash flows from operations? Will we have some of those? Not prior to starting the business, but we'll have them starting in January, we hope. Okay, and I'm in the furniture business, so what do we call those cash flows from operations, that money coming in? Sales, okay? So we have a line that says sales. That's the only three cash inflows we're going to have on this spreadsheet. Okay? Then we're going to have some cash outflows, and we're going to have a bunch of them, trust me. So I'm going to insert a bunch of rows there, okay? Now, the stuff that's on our sources and uses of funds, obviously, is going to be a cash outflow, right? Our beginning inventory, does cash leave the business for that? You got to pay for it. Nobody's going to give you that $312,000. Our delivery vehicle, you got to pay for it. Nobody's going to give you that delivery vehicle. Furniture, fixtures, and equipment, property insurance. Okay, what about working capital? That doesn't go on there. Okay, so here's what I'm going to do. I'm going to go back to my cash flow. I'm going to go here and I'm going to say, okay, go over here and get my beginning inventory. Then I'm going to click that and drag it down. Ooh, it's magic, right? What did I do? I said, take whatever is in sources and uses of funds, cell A7, right? Go to my sources and uses of funds, cell A7, right? Or alternately, go here, right? You can always go back and forth between your tabs, okay? So that gets our start, okay? And I want to do that for the next 3 rows from my sources and uses of funds so that I get my delivery vehicle, my furniture, fixtures, and equipment, and my property insurance. So all I did was I clicked it and drug it down for 3 additional cells. It's not magic, it's just the power of software. Okay? So those are my cash outflows that are happening before the business starts, the ones I've identified anyway, okay? I've got cash in. Oh yeah, let's just go over here to my sources and uses of funds and bring that $375,000 in. And then we'll click that and drag it down, okay? How much do I have in sales prior to starting the business? 0, because when I have sales, what have I done? I've started, right? So there's a 0 there. What do you think this total cash inflows, and I can click and make that wider so it doesn't give you any grief. What do you think that this cell should contain? Yeah. It's simply the sum of the 3 cells above it. And literally, y'all, that's how smart Excel is, right? It's looking around it at all times and saying, okay, what's in the cells? What makes sense for me to sum? If I'm right here, if I hit auto sum, it says, oh, loose nut behind the keyboard wants me to get this number, and this number, and add them together. All right? I mean, that makes sense. But you can change that if you want to. Right? If you don't want that, you can click on other cells. If you wanted to go somewhere else and get a sum, you can make it go elsewhere. Make sense? Okay. So when we do that, our total cash inflows prior to starting the business, y'all are gonna like this, okay? It's the same as our sources of funds. Okay? It's 500,000 bucks. Okay? Our beginning inventory. Let's go here to the sources and uses of funds. There's 312,000. Again, what do I do once I get my anchor? I click and drag it down. Okay. Now, will I have some other expenses and some other cash outflows before I start the business? It's highly likely. So I don't want you to be married to the assumptions that you gave me. Those assumptions are really, really dynamic. Have any of y'all leased an apartment or a house lately? Yeah, what do they expect you to do when you sign a lease? They expect you to sign a security deposit. Did I put that in my assumptions? Okay. But is it going to be real? Okay. It's going to be real. Okay. So what do I need to do? I should go back to my assumptions where I'm talking about my location. Okay. My rent is $20,536 per month. Okay. I'm going to insert a row there. Okay. I'm going to come here. And I'm going to put in another assumption. Now, I'm not saying that your security deposit is going to be equivalent to 1 month's rent. Here's what I'm going to do. I'm going to negotiate hard, and I'm going to let my 813 beacon score speak for itself, and I'm going to try to make that not happen, right? I'm signing a 5-year lease. I mean, after all, if I'm paying $12 per square foot per year for a 20,536 square foot building, okay, that means I'm paying roughly $247,000 per year. And if I'm paying that for 5 years, that means that I'm paying roughly $1.25 million in rent over a 5-year period. So do you kind of see, if they don't trust me for $20,000, I've got a problem, right? I'm going to negotiate hard to make that go away, but you may not have that same ability, right? The thing with a lease is every lease is negotiable. It truly is a business contract, and it is negotiable, right? But if you find something like that that you left out, just go put it back in, right? So that means I also need to put it in my sources and uses of funds. Okay. And guess what? My formula didn't work here because I inserted an additional cell. So I need to go in there and make sure that I include that cell. Now, if I've got something as substantial as $20,536 coming out of my working capital, I probably need to put that in my sources and uses of funds. Okay, you see what I'm saying? That's one of those things that could be a real ouch. I noticed that some of you literally made your sources and uses of funds actually equal one another with no working capital, right? What happens if you come up with an additional expense? That's going to bite you in the rear end, right? And you have no money to pay it because you've invested 100% of your savings into it to get to your equity. You've leveraged that as much as you possibly can. You've used all the money as stated in your sources and uses of funds, and you come up.
I have a question. Can you demonstrate how to insert a cell again?
Sure. All I did was I went there and I right clicked and said insert. Now that's just one of many ways to do it. Okay. To give you a tip about the shortcut keys, like the Control-C and the Control-X and the Control-V and the Control-Z and Control-Y. Do you see that when I show you insert there, which I got from right clicking my mouse, do you see I is underlined?
Yes.
What that's telling you is that you've got a shortcut for that. Control-I would do the same thing. Okay.
Oh.
So if you go there and you do Control+I, nope, I'm sorry. Maybe it's Control-Alt-I, or maybe it's Alt-I. Okay, I'm not sure which it is, but there is a shortcut. Okay. Look for those things. I used to have a double-sided typewritten page that had all of the keyboard shortcuts on it back when I worked in this, 5 days a week. Okay. There's another option. You could go up here and do insert, right? And you can insert a row. You can insert all kind of stuff. Okay. All right. So on my cash flow, back to that, guess what? I need to put in the security deposit. Okay. Now, generally speaking, y'all, this is where you're going to list all of the expenses that occur in your business. These things that we've listed here are actually cash outflows, but they're not expenses. Okay? Your beginning inventory, you know, because we're using the accrual basis of accounting, that inventory doesn't become a cost until you actually sell it, right? And your delivery vehicle is not an expense because you take depreciation expense when we depreciate that $35,000 straight line over 7 years. Furniture, fixtures, and equipment, ditto, 5 years, right? So we'll take three. It costs us cash, but it's not an expense for the business. Our property insurance is $10,000. That is an expense. Okay, and that's an expense that's happening before we start the business, right? Our insurance agent told us, you've got to prepay your property insurance before you can open. Okay? Our security deposit isn't an expense at all. It's actually an asset that somebody else is going to hold for us as long as we have that lease. It's an other asset. If we satisfy the terms of our lease, we'll get that $20,536 back after 5 years. If we break our lease, they get to keep it. Right? It's kind of the way it works. And by the way, there's no magic number. Depending on the level of perceived risk, your landlord may say, Royal, you look a little shifty. You've never been in business before. I want 3 months rent from you. Remember, it's negotiable, right? They can ask anything they want to ask. You don't have to agree to it, but they can ask it, right? As long as they're non-discriminatory, it doesn't matter what they ask. Okay? I'm just putting it in there for example. All right. So do y'all remember when I listed those 7 categories of fixed costs? I'm going to write them up here so that hopefully our folks on Zoom can see. You remember USAIIRD? You remember those? Utilities, salaries, advertising, insurance, interest, rent, depreciation. Okay, so depreciation is a non-cash expense. It's not going on the cash flow statement. Okay? So we can cross that out. Will we have some utilities? You betcha. Will we have some salaries? You betcha. Will we have some advertising? You betcha. Will we have some insurance? Oh yeah, we've already got it up there. We'll also have workers' comp. Will we have interest? Are we borrowing money? You betcha. Will we have rent? Okay, you betcha. So let's just start with that. But before we do that, I'm going to come here under beginning inventory. I'm going to insert a row again, because I like to keep my categories sort of together as much as I possibly can. And I'm going to put cost of goods sold. You know, that's closely related to inventory, right? Okay. And if you'll remember from my assumptions, cost of goods sold is equal to 60.8% of my sales. So for that particular row, I can say always, always, always for my cost of goods sold, go up to my sales row, okay, and multiply whatever's in my sales row times 0.608. Where did I get the 0.608? I got that from my IBIS World Report. Okay, they called it purchases. Okay, and since it's always going to be that, we can copy that all the way across. Okay, just to December. Okay, and what happens is because we put a formula in there, anytime that I put in some sales, if I go here to January and I say I'm going to make 75 sales at $3,000 a piece. Do you see how when I put that number there, it populated my cost of goods sold? Okay. Every time I put a number in here, it's going to automatically populate. If that number changes, it automatically updates. Does that show you why you don't want to just type numbers into Excel? Right? You want to harness the power of this wonderful spreadsheet tool. Okay? If something changes in one place, you don't want to have to change it everywhere else. Okay?
So the formula you used was just times D7.
Yeah, take D7, right? And multiply that times whatever your cost of goods sold percentage is. My cost of goods sold from my IBIS World Report was 60.8%. That's also over in my assumptions. Okay? Cost of goods sold are expected to be 60.8% of sales in accordance with the industry average. Okay? And my beginning inventory, I mean, all of that stuff's coming from industry standards. And I'm going to average 50 transactions monthly at $3,000 each. Now, why did I put 75 transactions in there for January? See, I put in a formula. What does every business have when they open? A grand opening, right? So is it reasonable to think that I would sell more for my grand opening? It works kind of like this, y'all. If y'all ever seen Eddie Murphy, don't tell me that. You're much too young to have listened to Eddie Murphy. Okay. Have you ever heard him talking about the new girlfriend? Okay. The Ritz crackers. Trust me, it's out there. It's on one of his albums. What happens is you got this brand new furniture store that comes to town. Let's just say it's crackers, right? You got these brand new crackers that come out. And you think they're all kind of special crackers. And you say, these ain't no regular crackers. These must be some Ritz. And you eat those crackers, and then very quickly you realize that those aren't Ritz crackers. They're just plain old crackers. Okay? Now, I know Manella's never watched Eddie Murphy, so she doesn't understand what I'm talking about there. But people think when a new business comes to town, because it's advertised differently, it looks differently, that it's something special, right? So they're going to rush to that new business, and that business is going to do above average sales for a period of time. If you don't believe me, just think back before the pandemic to the first time that a restaurant, or the last time that a restaurant opened up in town. How long did it take you to get into that restaurant when they opened up? Everybody wanted to go to the new restaurant because it was new. It was something that they'd never had before. They wanted to see if it was any good, right? In the industry, they actually have a name for that, for what happens. They call it the dead cat bounce. My apologies to people who love cats. They call it the dead cat bounce. Imagine if you were on top of Big Blue, downtown Wichita Falls, and you threw a cat off the top of the building, right? Well, what do we know about the cat? He's always going to land on his feet, right? Whether he'd survive the fall, we don't know. What if you threw a dead cat off that building? Is he going to bounce? No, he's going to make a splat, right? So what happens is your business starts here with sales up here when you're brand new. And then all of a sudden you fall off a cliff and your sales goes flat. Okay? There's a honeymoon period. That honeymoon period, everybody thinks that this furniture store is the cat's meow. But all of a sudden they find out it's just a plain old furniture store. So sales drop off to probably below average. Okay? And then it takes you a while to build your business back up. And aside from that, you also have the cyclical nature of whatever industry you're competing in. So we might do this, right? 75 times 3,000, okay? And then it drops to 50 times 3,000. And then about the fourth month, okay, things start tailing off. Okay? And it takes us a while to build back up. Rianne? Pull your mask down so I can hear you. I'm sorry. I can't hear you. I'm sorry. Just pull it all the way down and talk as loud as you can.
She asked, can you explain where you got the figures from for January, the sales?
Okay.
10,000?
Yeah. So what I said in my assumptions was that we were going to average 50 transactions monthly at $3,000. That's in my assumptions. Okay. The furniture store is a big ticket business. You might have a lot of people come through the door, but you got a lot of looky-loos, right? You got people that are coming in that are just window shopping. And you might have 10 customers come in for every one customer who buys, or even worse. It ain't like going to Specs. You don't go to a liquor store to window shop, do you? You go to a liquor store to buy liquor. You probably know what you're going in to buy, okay? So your close rate is a lot higher, okay? All I said is at the beginning of this business, we're going to have above average sales. We're going to do for a couple of months, 75 transactions, and then 50 transactions, and maybe even at that point, 30 transactions, right? 3,000 is the amount of each transaction, okay? And then it takes us a while to build back up to where we are, where we should be. Now, I'm just suggesting to you, I'm not actually trying to justify this. I'm just suggesting to you that the business isn't always going to be the same amount every month, okay? Are there businesses that have peaks and valleys? I mean, are there businesses? Can you imagine if you had a gun shop in Texas right now? Okay. What happens in 2 weeks from Saturday? Gun season opens for deer. The next week, duck season opens. Dove season's still in. It came in Labor Day. It's still in through the middle of November. Okay. Archery season for deer came in the beginning of October. If you had an archery shop and you sold bows and arrows, right? When are you going to sell the most? Right before and during the season. If you have a boat shop, when are you going to sell the most boats? April, May, maybe March. When are you going to do the most service if you have a boat shop? There's the unholy trinity for boaters. Any of y'all know what I'm talking about? The people who only take their boat out 3 times per year: Memorial Day, 4th of July, Labor Day. They don't run their boat any other time of the year. They take it out that day and it tears up. June is a huge month for boat repairs. July, a huge month for boat repairs. September and October, huge months for boat repairs. Okay? March and April, huge months for boat repairs. Nobody's getting out in their boat in January and February, in which January and February in Wichita Falls, because it's mighty cold, right? So the business is cyclical. I'm not even really taking that into account, the cyclical nature of this business. I'm just telling you the dead cat bounce, right? We start off guns a-blazing, right? And what I'm trying to do is I'm just trying to get it back to what I said was going to be my average. Now, the reason I've highlighted those sales is I wanted to know how far off I am from what I told you I was going to do, which is 1.8 million. I'm still 240,000 bucks off, right? This is 40 sales, okay? I need to probably ramp up my sales a little bit more. This is where you can make a mistake, okay? I told you I was going to average 50 sales monthly times $3,000, okay? I did 75, 75, and 50. Then I dropped to 30, 30, 30. Let's do, instead of 35, let's do 40. Okay, and because this is going to be the last month of the year, last quarter of the year, what if I do 60 here? What does that look like? Okay. Now, if I sum those up, I've got 177,000, or excuse me, 1,770,000. Okay. So I'm basically missing about $30,000 in sales. All I'm doing here, folks, all I'm doing is I'm trying to get at my average number here. I told you I was going to do $1.8 million in sales. So by God, when I get over here to my sales forecast, I want to make sure for that first year I've got 1.8 million in sales. And I'm trying to make it look something like what I think reality might be. Okay? Do a lot of people buy furniture at Christmas time? Yes. My wife and I have done it. Okay, honey, we're not buying anything for each other for Christmas. Wink, wink, nod, nod. Guys, do not fall for it. It is a trap. Okay? But we've agreed on that before, and we've bought something for the house, right? Or our anniversary is in December, and we've gone, to the Caribbean, taken a week-long vacation and gone to an all-inclusive or something, okay? But what I'm trying to do is make that total for the year the same as I said it was going to be in the assumptions. The assumptions, the business expects to sell 1.8 million in the first year, okay? 150,000 monthly average. Is that 1.8 million? There's a little trick in Excel, okay? If you'll click the cells, it'll give you the sum, the count, and the average. That's small, and there's no way for me to make it any bigger. It says average 150,000, count 12, sum 1.8 million. Okay? Let me make it clear to you. If you tell me that your sales are going to be 1.8 million, and I look at your cash flow and your sales are 1.6 million, there's inconsistency in your financial statements and you're going to lose points on your grade. What happens if you take that to your banker? They don't know what to believe. You do it one time, you get asked the question, okay, so Zach, which is it? Is it 1.6 or is it 1.8? You have multiple inconsistencies. Now you create a pattern. The pattern is either you're a liar or you don't know what you're talking about, right? Because you've contradicted yourself multiple times. So you got to make sure that there's internal consistency, okay? All right. So we've got cost of goods sold, we've got sales, got our security deposit. I'm just going to start filling in stuff there. Utilities, salaries, advertising. I needed to add more rows. Insurance, interest expense, and rent. Okay. This isn't enough. This is not enough. Remember, I said these are just 7 broad categories. And I said utilities could include things like water, sewer, garbage, internet, natural gas, and electricity, and possibly cable television. If I'm selling home appliances, home electronics in my furniture store, do I want to have display TVs hooked up to it? Well, they do when you go to Best Buy, don't they? So they got to have some type of subscription, whether they're doing it streaming, but it's still cable, right? I'm not going to bust that column out. Not going to do it, okay? Salaries, I'm going to change to wages and salaries. And directly underneath that, I'm going to insert another row. Okay? That row is going to be payroll taxes. Right? I'm just keeping stuff grouped together. Advertising, that's not going to be multiple categories. But insurance, I'm going to have at least 2 types of insurance. I'm going to have property insurance, which I've already got up there, by the way. Okay. I'm going to also have workers' compensation. Okay. And by the way, I probably want to put workers' compensation up there with my other expenses, right? My other payroll expenses, okay? For interest expense, it's not enough that I have to pay interest on the money that I borrow. Those pesky bankers also have an expectation that I'm going to pay down my principal. Okay? So I had to put in a row for that. Am I ready to start filling in some numbers? Yeah. Again, I'm relying on my exemplary credit rating to not have to pay a utility deposit, not have to pay anything up front. I'm going to pretend like I don't have any wages and salaries up front for the time being. But I do know that my payroll taxes are going to be that number, whatever my wages and salaries are, times 11.15%. Some of you came up with some off the wall numbers, and I don't know where you came up with them. I saw everything from 7.65 to like 36%. I think we're commingling stuff, okay? Payroll taxes are going to be 11.15%. That includes your portion of the Social Security, your portion of the Medicare. It includes state unemployment insurance, and federal unemployment insurance, okay? That's what it's going to be. Okay? Essentially, it works like this. Y'all bear with me, okay? Social Security, 6.2%, okay? Medicare, 1.45%. You add those together, what do you get? 7.65, okay? That is payroll tax. There's other payroll taxes that you have to pay, okay? State unemployment, sometimes you'll see that abbreviated, SUTA. Okay, state unemployment insurance is 2.7% initially. The max state unemployment rate, the max rate is 5.4%. The initial rate is half of that. And it's a lot like workers' compensation insurance in that you have to build up kind of a reserve fund. And if you have workers who file unemployment on you, their benefits come out of your reserve. Okay, so if your reserve drops or if your reserve goes negative, what happens to your rate? It's going to go up. Okay? It may go up as high as 5.4%. The initial rate is 2.7. If you pay 2.7 for the first couple of years and you don't have any claims against your unemployment insurance, in other words, you don't wrongfully terminate anybody and they don't draw unemployment against you, that rate can go down. I've seen that rate as low as 0.01%. What does that mean? It means that an employer has such a reserve built up in their workers, in their unemployment account, that they could pay claims for the foreseeable future and we would never have to go up to pay those claims, okay? Federal unemployment tax, sometimes you'll see it abbreviated FUTA. Sometimes you'll also see state unemployment as SUI. So it's either SUI or SUTA, okay? They're 2.7. Federal unemployment is 0.8%, okay? 0.8%. So if you add all of those things together, okay, basically you get 7.65 plus 3.5. Put them together and what do you get? I sound like a cheerleader, don't I? Put them together and what do you get? Okay, 11.15%. That's the rate, okay? Don't try to get creative and tell me that your unemployment or that your payroll tax rate is 12.4%. Don't tell me it's 36%. Don't tell me it's 7.65%. Damn it, your rate's the same as everybody else's. Don't care what your mama told you, you ain't special. Okay, it's 11.15%. Okay, so we simply put in a formula that says go up there to our wages and salaries and multiply that times 0.115. It's going to be that way until your rate adjusts or until Congress passes a payroll tax amendment. That has happened one time in the 35-ish years that I've been in business. That happened as a result of the Great Recession, okay? There was a 2% payroll tax cut. Folks, let me also tell you this, you don't really want that because they cut it out of that 7.65%, which means it was cut out of Social Security, which is already bankrupt. So cutting 2% more out of Social Security is a big problem, okay? Our workers' compensation insurance, I said it's going to be 3.5% of our total payroll payable in advance. I don't yet know what my total payroll is going to be, but I know where it's going to be. There's going to be a total in this cell right here. And if I multiply that times 0.035, when I put some numbers in for wages and salaries, and I total those numbers across, right? It's going to give me that. And if I make that 10, I'm just filling in numbers just so y'all can see what happens, right? If I pay $120,000 in payroll, my workers' comp estimate is going to be $4,200. That's what I'll have to pay in advance. I just filled in some numbers there so you'd see what was happening with payroll taxes and with workers' compensation. Okay? However, your workers' compensation every month after that until December is going to be nothing. Because remember, it's payable in advance. Okay? Our advertising, I want to go back to my IBIS World report because I really want to see what advertising is as a percentage of sales. That shows me assets and liabilities. That's not what I want. This is tedious, y'all, right? Okay. I'm trying to get to my stacked bar chart, which is going to be a couple of pages before this. It's on page 28. Okay. You see my stacked bar chart here? This little goldenrod color that says marketing. Thank God they broke this out because I couldn't possibly tell you how many percent it is. But they've got a paragraph here that says marketing accounts for 3.3% of industry revenue. Now, be careful, okay? Be careful, because here's the danger. Oh, all I have to do is put in a number that's 3.3% of my sales every month. I'm spending $1.8 million, or I'm earning $1.8 million in revenue. Therefore, my advertising is going to be 3.3% of that. Advertising is funny. Any marketing majors in here? Okay. A couple of you. There are 2 people that are graduating both marketing. Advertising is odd in that it should have an inverse relationship with sales. Never heard that? In other words, the lower your sales are, the more you should advertise. The higher your sales are, the less you should advertise. The 3.3% is just to anchor a number in your mind. Okay? It tells you that the industry average for marketing expenditures is 3.3% of industry revenue. I didn't share that screen with y'all on Zoom, did I? Here you go. I went to my IBIS World report, and there's a stacked bar chart that shows your expenses. And then immediately after that stacked bar chart, it gives you a breakdown, okay, on how those things break out. Marketing accounts for 3.3% of industry revenue. Here's the danger, Seth. I see a little confusion in your eyes, okay? If I tell you that it's 3.3% of revenue, the danger is that you want to make it a variable expense, right? But you remember I gave you over there 7 categories of fixed expenses, and advertising is one of those categories. So what am I trying to get at here? I want to get your thinking oriented. What's 1% of 1.8 million? Is it 18,000? Okay. What's 2% of 18 million? It'd be 36,000. Right? What's 3% of 1.8 million? It'd be 54,000. Okay. And what's 4% of 1.8 million? It'd be 72,000. You with me? Okay. That gives you an idea of how much money you need to spend on marketing. And if that sounds like a lot of money to you, I'm spending 4%. That's my plan, to spend 4% of my projected revenue on marketing. Why am I spending more than the industry average? I'm a brand new business. I don't have any history. Okay? And people driving by on Lawrence Road might see that old building that had FFO in it and think, oh, well, FFO has opened back up. It's up to me to educate them that I'm not FFO. Right? And what does it cost to educate consumers? A lot of money. Okay? So here's what I do. I'm going to spend $72,000 on marketing. Very simply put, that's 4% of sales. There's no rocket science here, y'all. But for my grand opening, here's how I'm going to make this work. I'm going to spend $12,000 up front. That's for my grand opening. That's before I open. And every month after that, I'm going to spend $5,000. Okay. What's the sum of that? It's 72,000. Right? 5,000 times 12 is 60 grand. Plus 12,000 for grand opening is 72. Oh yeah, if you're being picky here, would you want to say that I'm spending $12,000 on advertising up front before I open the business? Should that be on my sources and uses of funds? Probably. Right? Probably. It's definitely a prepaid expense, just like workers' compensation and property insurance are prepaid expenses. Right? And I put security deposit on there and I put property insurance on there, so you could probably make the case that I should put it on there. Here's what I don't want you to do. I don't want your sources and uses of funds to be this long. Okay? I don't want it to be that long. Keep it tight, keep it short. And here's the deal. This right here, just like this right here, is actually working capital. It's an operating expense, right? It's an operating expense. It's being paid in the current year. So I'm okay with that $12,000. I'm really even okay with that $10,000, not being itemized, because it's coming out of working capital. And just know this, okay? Here's the thing. There's going to be fine points. There's going to be nuances in your pro forma statements. And we don't want to be straining at a gnat, okay? This is just to help you understand what it's really like doing a business, right? When you're doing this for real and there's money on the line and you're asking people to commit their financial resources, do you want to strain at a gnat? You do. You do want to strain at a gnat. You want to make sure that every I is dotted and every T is crossed. Because the last thing that you want to have happen is come up short in cash to open your business. Y'all, I've seen it time and time and time and time again. People underestimate what it's going to take to do whatever they want to do. It's just the reality. It's kind of like building a house. Jake, have you ever heard this one? People say that when you build a house, you need to know two things. Number one, it's always going to take longer than you expect it to. And number two, it's always going to cost more than you think it will. Okay? If you don't estimate all of those costs carefully in your business, you're gonna come up short. And if you come up short, trust me when I tell you that a brand new business with no revenue that's short on cash has the stench of death, okay? A banker's not gonna be willing to advance you more money because you messed up, okay? So you wanna be very specific when you're doing it for real. Now we're just straining at a gnat, okay? I'm gonna leave interest expense and principal alone for now because I just really don't want to go there and I've only got 3 minutes, okay? But I am gonna put in rent. Remember, we don't have rent before we start. We had the security deposit, okay? Just like we have a number here that says total cash inflows, and we can copy that all the way across to December. We can actually copy it all the way across to total, okay? We need to have a row that says total cash outflows, okay? And what we'll do for that particular cell is we want to copy all of the cells that are above it up to the beginning of our cash outflows. So if I hit auto sum, right? It's smart. It says, okay, dummy wants me to copy everything that's above it. We want to run a sum, okay? So I say, yes, I'll accept that. Then I copy that all the way across. And I actually copy that all the way through the total. And I know I'm flying. I'll upload this video if it'll help you. Okay. I'm not as mean as y'all think I am. What are you laughing at? Okay. All right. So I've got my beginning cash. I've got my cash in. I've got my cash out. All that's left is to put in a formula, right? What is my ending cash? It's beginning cash plus cash in minus cash out, right? And y'all, by the way, does that formula ever change? What's my beginning cash for January? My ending cash for my total column. So y'all, watch this. For my beginning cash for January, all I do is I tell it, let's go down here to the bottom of this column and get that number, okay? And then we'll take this number and copy it all the way across, right? That formula, because it's always going to go down there to the bottom of the previous cell. This is always going to be the exact same formula, even in the totals column, okay? All of these are going to be copied, not up. Dummy made a mistake there, okay? They're going to be copied across, and I'm flying because I'm almost out of time. So I sum everything across, everything down, okay? I sum everything across, okay? Let me make this just a little bit smaller so that y'all can actually see it, okay? My pre-startup cash is 0. My January beginning cash, that's my ending pre-startup cash. My February beginning cash is going to be my January ending cash. So I've got a formula here that says go one column to the left down to the bottom and bring that number up, okay? Over here in this totals column, remember the top number in the total column is the number 0 because it's the total cash flow for the year is what I'm after, okay? The total all the way down is going to be everything to the left of it, right? We're totaling the columns across, okay? This is going to be the sum of those 3 things above it, just like your total cash in is always the sum of the 3 things above it. starting here, that's going to be the sum of everything to the left of it, all the way down to here, okay? Then this number, this total cash outflow, is going to be the sum of all of the stuff above it, okay? And this number and this number have to match.
Which number and which number?
Your ending total and your December ending have to match, okay? There's a really good reason for why they have to match, okay? A really good reason for it, but I'll tell you about that next week when I tell you about the loan, okay? It's gonna take probably 2 hours for this video to process. Are y'all okay with me uploading it in the morning? Okay, I'll upload it to YouTube in the morning and give you a link to it, okay? I'm sorry I kept you 2 minutes late, but y'all have a good evening and stay safe, please. And remember, this is due Sunday night by midnight.
I have another question.
Okay.
What was the alternate website that you gave me last time? Because I Googled and I wasn't able to find it, I don't think.
Do what now?
The
Biz Stats?
this stats. Okay.
Yeah, why don't you give me a call tomorrow and let me see what I can find out for you.
Okay. What time will work for you?
Either my cell or my office. They're both on the syllabus.
Oh, I meant what time should I call you?
I'll be in probably about 10 tomorrow, and I'll be here. I've got a faculty meeting at 3:30. If you call or text me, if I can't get with you, I'll get right back with you, okay?
Okay, no problem. Thank you.
Thank you. Hey. Not really. But if you need